Hello and welcome to another live trading session. Today is Friday, August 30th, and we are getting ready to roll our first UOTS 2.0 trade. We put it on yesterday. If you remember, we want to put our always on trade, the first strike of the three-step process. We want to put it as often as possible. So 1 day DT is fine, 2 days fine, depending on the situation. Right now, Monday is holiday, so it can be at least it's going to be at least 4 days. It could be 5 days. It doesn't really matter that much, but we want to keep it short and collect as much data as possible on that trade, while also allowing for some delta and some market movements, upward movement to maybe collect a little bit more in overall profits. So let's take a look here. We put a trade on yesterday at the 56.30 strike. We collected 28.50. That was around 60 delta strike, and market was at 56.15 at the time, and then we have our three-step a ladder process to go down. Every time we roll, if the market moves up higher on us, then we'll probably be moving the strike higher, and then we'll correct this in order to keep up with the percentages that we set out for ourselves. And that's about it. Market is up. Let's take a look here at the market real quick. So market is up a little bit, slightly, like 0.12, 0.13 or so. And if you remember, we still have a bunch of PDSs that are slowly bleeding money that are left over from the previous plan. But we left them on for now, and we'll just let them probably expire. We'll see. But our one trade, so pretty soon this is going to be a pretty clean sheet. There's going to be a couple of trades maybe, and then some defined risk trades that we talked about earlier as a second part of the UOTS plan. So right now we're dealing with our naked put, which is right here, and obviously showing a little bit of profit, both directional, so delta and theta right here. And if we click on it, right click, we can just go roll expirations, and we can go to 4 days, which would be Tuesday, and we can consider there's a significant difference between just 4 and 5 days. But as we said, we want to keep it as short as reasonable. And given that the market has moved up slightly, we can also consider going a strike higher as well. Right now, if we look at this, we would be collecting additional, $7 and a change. And so we have a couple of options. We could go expiration higher, keep something like this, collect a little bit more. We could do that, but instead we want to do a little bit more. Let me go back in time. We want to trade slightly more often and collect that initial premium that bleeds the fastest. And we'll move up a strike and go to 56.35. Go right here. There's pretty wide bid-ask spread, so we'll just try and be a little bit greedy here and work our way down to see if we can do something there. Probably not, but it's worth a try because there's not much else for us to do. So we'll just be where is it? It's right here. Replace. Let's go down a little bit. Let's see if we can do that. So no, and then it doesn't really matter as much. Somebody was asking the Discord, what time should we roll? Ideally, probably late in the day to collect as much of the current premium, because it'll be coming down to zero as the day progresses, because today is the expiration date. But I'm in Europe, so it would be pretty late in the day for me, and I don't want to be thinking about it too much. The difference is probably somewhat negligible, so we're doing it now, even though maybe we could do it if you're in US, you might consider doing it a little bit later in the day. But the only concern I have here is that the bid-ask is pretty wide, and let me see here, it's pretty tight on this one. Let me just see what's going on here? Yeah, it's this one that's giving us a little bit of trouble. But okay, so we'll just work our way down. We don't, we'll do what we can. We might have to play with it a little bit more. Let's give it 11. All right, guys, market makers, play with us. Replace the order. By the way, any questions in the meantime while we're waiting for this to play out? Let's replace this one. Let's go a little bit further down. We'll have to, so we got 1025, okay? So let's just quickly record that. Here we'll go rolling credit per contract. So every time we roll, we're gonna start with equal, and so we can add on plus signs afterwards. 11, no, I'm sorry, was it 1025? I'll have to double check, but I think it was 1025. So every time we roll, we'll just add this, and that way we can get cumulative numbers as we go on. Here we're gonna change this to 35. I think that's the strike we got now. So let's see, 1025 and 56.35. Now we don't want to be rolling down because and lock in any losses directional. So, but it's okay to roll up a little bit when the market moves up. And let's see, the difference here is negligible. It was 56.17, so that doesn't really matter. So let's just go briefly over the plan with this. So number of rolls, we put 1 here because the formulas will keep track of the commissions and fees for each roll. It's around 250. So given the original trade was 250 plus a roll, and then down the road we can have 3 rolls, or plus 1 would be 4. So this way we just want to have a quick look at how we're doing, and then at some point we'll be closing the trade and we'll get the total profit and loss. So let's go back to the plan just a little bit so everybody's on the same page. We're collecting theta and delta premium on this original trade, which is above the market, allowing us to collect this market movement, market drift. And should the market turn down, so as I said before, we look forward to market moving up slow, well, however it wants. We look forward to that because we collect our theta and the difference in strike between strike and the current market. So basically, as if we had a covered call. So we collect both. However, we also can get excited if the market goes down, so long as it doesn't go extremely down. Even though with such a low leverage, we don't really care. Even if the market drops down 10% tomorrow, with one contract, we would be fine. So if the market goes down, and this particular strike here around 53.90, I mean, we can round it up to the closest liquid strike. Once that strike is making sense at around 2 weeks DTE, roughly 2 to 3 weeks DTE, then we can sell that strike. Market could be down 2% at that time, could be 3% down. It doesn't matter really. But once that strike makes sense, we'll sell that, and that strike will be probably at or out of the money, and we'll be collecting mainly theta on this particular strike. And then if the market continues to go further down, and then at some point the strike at around 50-50 makes sense at around 5-6 weeks out, and the VIX is high enough, and we are collecting significant premium, this will be probably out of money strike. Then we're collecting, we're taking advantage, we are capturing that increased VIX, increased volatility, and capturing that theta premium, and that's where we stop, given our account size and the instrument that we trade. I've settled on the three contracts max, and then we keep it at 3 contracts. Should the market continue to go down around 10-12% down we would start defending with the zebras or some other, other hedges. But until that point, we're not doing anything other than just playing with what market gives us. Now, a larger size account could decide to go with the, four steps. There probably could be different combinations that would achieve the same thing. I will talk more about that as the account grows, hopefully. And but yeah, that's about it. It's pretty simple, straightforward, and easy to keep track of. So unless there is any questions, I will wait. Oh, there is somebody's. Let me just check. If we do this with a SPY in PM account, do we also roll if the market goes down, or do we take the assignment? The rules stay the same. So the plan for rolling is for right now. The plan is to roll so long as it's reasonable to roll. In other words, we don't have to roll 6 months out, and collecting premium, extrinsic value, right? So if you can roll your strike 4 weeks out and collect decent premium, then you roll. Once that premium is gone, we will let it get assigned, whether it's SPY or MES, it doesn't matter. We let it assign at that point. And you want to roll once your extrinsic value is close to zero, because you might get an early assignment once there is no more premium left. So keep that in mind and watch your extrinsic value. So the plan is to roll either on the expiration date or once there is very little to no premium left, and otherwise take the assignment and go from there. Hope that answers the question. Anybody else? Anything? No? All right, guys. In that case, I wish you fantastic weekend, and I'll see you all on Tuesday when we'll be rolling this particular trade, and we'll see what the market. If the market is down, we'll still try to roll, but we'll follow the rules. Have a fantastic weekend. See you Tuesday. Bye.